Today's 19th of May market opened with a huge gap, and this is popping in reaction to the sell down in Wall Street. They will attempt to close this gap but were short-lived, eventually retraced, trading a long-dated doji down 34 point at 3190. Now over here we have a very severe sell down, and this is pretty obvious from the series of gap, and somewhere at the support level there's a bounce. So today buy is actually part of a throwback, an attempt to actually close up this daylight. Notice actually very big swing and likely to continue sometimes. So it's better to actually wait for the directions to be clear before we actually go back to the market in a big way. So right now it's important to scale back or stand aside. Immediate resistance is at this pivot high here of 3241. The most significant one is at the gap, which is at 3250. Support is actually at this recent low here of 3165. The most significant support is actually at this level of 3136. Now let's take a look at the charts of Brent crude. Notice the last two sessions we see retracement near the resistance level, which is at 115. So this is an important level to watch. Breaking these levels will change the characteristics of the charts. By and large, the oil-related stocks are actually weak at this point in time. So any break on the upside may not make any significant difference, but nevertheless, at least it may stabilize the downward move of some of the oil-related stocks. This is the US 10-year Treasury yield. We'll begin to see retracements. Notice over here, it was actually trading within these channels, and it actually broke the channels over here, followed by a classic throwback. Now, I mentioned previously, it is not unusual for retracements because actually it was trading within a long-term downward channels, and there was this break, and this break is a significant event. And obviously, we see that in reactions to the runaway inflation in US. So we do expect a retracement to actually test this downward channel line, and possibility of it moving up after that is high. Now let's take a look at the major indices, US indices. This is the S&P 500 on the daily charts. Again, breaking the support here, we see a classic throwback and followed by further downward move. And yesterday was a wide range bar with slightly increase in volume. This is a weekly chart. It's pretty obvious. Market actually make a lower high and break this low. We have a lower low, so basically downtrend is in force. Notice that the 40-week moving average actually turned down. Likewise, we see that in Nasdaq, which is perhaps much weaker. Again, on the daily chart, it's pretty classic throwback followed by downward move. Again, on the weekly charts, breaking this low is significant because this support is important, and the fact that it has been taken out, market is generally bearish, and you can see the 40 weeks actually turning downwards. Now we do expect a attempted rally very much like this. During the attempted rallies, some of the stock may move up. Now it's not for us to actually go long, but rather to identify weak stocks during the throwbacks to short. Let's take a look at the stocks we're discussing. This is Golden Energy, perhaps the strongest of all the stocks. Now the stock actually had a very powerful move yesterday after a series of low volume bar. Unfortunately, it was short-lived. Today it made a high, but it retraced. So we can perhaps look for a setup here and to see whether there's possibility to take out this recent high here, which is at 815. Again, if at all, it's likely to be hit and run because the stock has been trending for quite some time. Semco Industry, pretty obvious rollover, and this is a double top. And notice again the very classic throwback. The only thing is that actually for the last 4 sessions itself, we do see that the bull has actually not thrown in the towel. There were actually attempts to actually move up So the last 4 bars, we notice it was open low but actually closed high. So unless we see a large wide range reversal bars, it may actually hang at these levels. So I'd like to actually see what happened over the next few sessions. Now obviously, if we actually move on the downside, we may take an opportunity to initiate shots, because that would indicate that the bull has actually given up the fight. Keppel Corps, this stock is more likely to start in the trading range. Notice actually the big downward move and equally strong upward move. So usually with a pattern like this, it's more likely to actually start in the trading range, which is a positive sign, especially if the market is weak. Stock hold up well is resilient and likely to move up if the market eventually normalizes. Now, I mentioned previously that the palm oil stocks, the bets are off and extremely volatile. So these are the congestion areas. Again, you need times for it to actually settle, and once it settles, perhaps the directions become clearer. Likewise for First Resources, so you can see very obvious congestion area. Now, it's not advisable to trade a chart in this manner. So you notice a lot of overlapping bars. So basically, it's just consolidating with very big, large volatility. The more obvious one is Wilmer, which mentioned before previously, is for short. And these are very nice setup to shorts, and managed to make a new lows today. Just be careful if you're holding positions. Be mindful of the support level, which is at probably 405 or so. Just manage position. Notice the 1326 SMA is very directional, so the trend is actually considered strong. On the downside,